What's going on, everybody? It's Jeff here. Welcome back to the channel. What a bloody way to start the week. Earnings season is upon us, and inflation numbers come out Wednesday. Yesterday's video, I was not able to cover everything you need to know for the week ahead, why investors are absolutely full of fear, and what to look forward in the short term. So let's get right into it. First off, SPY ripped out of the gate, formed a little bit of a double top about 2 hours after market open, and then just fell off a cliff all day long. I will point this out on the same trend line that we have, as you can see here, this bearish pattern. We rejected off the 50 moving average and this trend line as well. As you can see, every time we make a lower low, we are also making a lower high. This is a bearish pattern. I will say this though, in contrary to this bearish pattern and everything that's going to be happening, this week, especially with inflation and what the big banks' outlooks are going to be, will give us an indication of, are we going to see more upside coming forward. This is known as divergence. It's when the stock price has made a lower low but the RSI has made a higher high. It's actually a bullish event. So if we can get a good positive news out of the inflation numbers, Jerome Powell is going to ensure that it's going to be transitory and the big banks have good outlooks going forward, you could expect a move to the upside. We haven't yet gone long on many positions. A lot of our great tech stocks, our value stocks, cyclical stocks are really beaten down or at good levels. I just don't have the confidence yet in the market to start really adding heavy into those positions. We're still crushing it in the short plays because a lot of investors are just, playing the quick plays, getting those, those low float runners. We had a couple great ones today. But let's talk a little bit more about this week. Big banks are going to kick it off Wednesday morning. And like I said, there's two things investors are going to be looking at. One, are the numbers actually going to validate their stock price, and as well as what their future outlook is? How does the real estate market look? Are they getting those mortgages coming in? Okay, is money going to continue to turn? Is there consumer spending? Is there a lot of money being held in savings accounts? All these things investors are going to look at going forward. The next two things that are going to be very important are going to be the inflation rate and the producer price index. The producer price index is not something that I think investors look at very heavily, and it's certainly not something that I look at very heavily, but I'm going to cover exactly why it's going to be important this time around. So first off, inflation has hit 5.4% for 2 months in a row, and then it dipped down to 5.3%. And while Jerome Powell has said, no, inflation is not out of control, even though gas and energy is absolutely soaring, inflation is not out of control. It's going to continue to be transitory. Investors are not fully convinced that it is going to be transitory. And the reason being is because of last month's high producer price index. So what they feel is that companies' cost of goods have increased, but they haven't yet passed it off to consumers. So that inflation numbers are actually lower than what is accurate. Meaning, if a company sells a $50 product, that their cost of good is, let's say, $20, and that price went up to $25 or $30, they haven't yet raised it from the 50 to either $55 or $60 or wherever it should be. So inflation, those numbers are not fully accurate yet. If you see another higher producer price index coming into this month, you can assure that those numbers are most likely not accurate, and investors are going to continue to pull out of it. However, seeing that the Fed has continued to purchase $120 billion a month, keeping bond prices down, investors haven't yet shifted over to treasury bonds. And the reason being is because when the 10 years offering 1.6 1.7%, but inflation is over 5%, everybody talks about sitting on cash is like losing money. Well, in this case, it would be the same thing with buying a treasury bond because the prices are not yet enticing for investors to go over to it. Another thing that points out to it is look at the crypto market. The crypto market is absolutely, been on a tear lately. Bitcoin's been doing very well. Just shows that investors are still willing to play some of the riskier bets like the stock market and the crypto market. And they don't want to jump over to the treasury bonds as of yet. But if inflation continues to get out of control and the Fed cannot keep the treasury bonds rates low to entice investors to continue into investing in the stock market, that's when you're going to see that huge shift begin to happen. So keep in mind on that going forward. And like I said, if you look at energy, it is absolutely run rampant. It is scheduled to be released October 13th, which is this Wednesday at 8:30, my time. Look for it to be below that 5.3%. Because you can see right here 5.3% for 12 months, 5.4% was the 2 months prior. So if we can hang below those two numbers, like I said, it'll give a little bit of confidence back into investors to see a higher upside. Until then, we're going to continue to play some of the short plays. SoFi was awesome. We bought that pre-market. I told everybody in the group that it might dip a little bit closer to the 1650 level, but it was going to make a slow move complete to the upside all day long. Morgan Stanley came out of it. This is a great company that is, I think, is priced very, very well. And like they say, there's two catalysts that could boost the stock in the months ahead. Not a bad play to dollar cost average into if you are only a long-term or swing player. The next one that was great today, I'm going to give you another idea, was this one right here, PTGX. They had an FDA clinical hold that was removed. And I said, remember the stock from last week. And I'll go over that in a minute. So PTGX, it was murdered back in September when a clinical hold was placed on one of their clinical trials. And once that hold was released and they're continuing to be able to do their studies, the price went way back up. It had an average price of, I think, around $45. As you can see, it got down to $13, and now we're sitting at about $35. It was sitting around the $45 price point before that hold was made. So there still is some more upside to this. Jefferies came out with a $60 price target. I played it only during the day. I'm still worried if they might potentially do an offering now that the stock has run up so much. And today I also said it had like the feels of that CCIX from last Friday, which was a great play for everybody. But this is the next one I'm going to talk about, and I'm going to give you an idea. It does have risk to it, just like anything else. This is Allo. We talked about this one last week. Their stock price hung around anywhere between that $20 and $25 level. They had a clinical hold on one of their studies. So it is hanging around the $13.50 level. Some people got into it right away around that level, wrote it up to a little over $14 today. Let's go over the news of what exactly happened. The FDA placed a clinical hold after one single patient reported a case of chromosomal abnormality. And while I am not a doctor, I am nowhere in the medical field. A couple things I do know after playing biotech stocks for a long period of time is that when there's a report in a single patient and it hasn't yet had significant impacts that were reported as of yet, chances are this is a little bit of an overreaction. Just like anything that goes through, whether it's talk about the vaccine that everybody's been talking about as of late, or even just something as small as an ibuprofen, there are issues where there are people that do have reactions or bad cases from taking any of their drug products. So keep an eye going forward. If there is a clinical hold placed off of this stock is gonna, probably might not jump 100%, but get a 50% run on it on an overday is completely possible. You want to keep your stops tight, is because if there is more cases, or if this single case does have more, more negative news going to it, the FDA might pull it completely, and therefore the stock price is just going to continue to drop even further. So it is a little bit risky of a bet, but keep that one on your watch list going forward. Like I said, these are the type of plays that are running for these are the type of plays that are running right now for us. Once we can get some confirmation, we're going to jump back in to these long-term swing plays, and then hopefully we can get back to a time of like we were in the beginning of 2021 and last year 2022, where every stock just seemed to ran every single week for us. So that's it for this video. I'll see you in the next one.